this is a topic which probably all of us, we are busy with, filing various documents. We are all busy with, filing our annual filings. So to deal with, we have chosen this subject. We have chosen this subject, intricacies of filing of AOC-4 and MGT-7. For that, we have with us, actually, Mr. Himanshu Kapadia was supposed to be joining this. Unfortunately, yesterday only I got a call that he is running a high temperature. So instead, we have requested her, his partner, Pooja Jain, who's going to be taking these presentations. And we also have our own partner from Mehta Mehta, Ravina Dugar. She's from Calcutta. And Ravina also has almost 7 to 8 years of experience in a CS side. And we also have Mr. Bala, who's also with us. Of course, he has also 4 decades of rich experience, all-round experience, as a senior position. So without taking much time, I'll request Mr. Bala.
Ramesh also here, sir.
Yeah. So, okay, sorry. So we have a very senior persons, and we are very privileged, to have, with us, Mr. Pramod Bhai, one of the senior most member from our region, from Mumbai. And he was also former Central Council member and a chairman of West India Council. So we welcome you, Pramod Bhai. Thank you very much for being a part of us.
Thank you, and I appreciate the way in which you have been consistently doing webinars of a very educative interest to professionals. And I'm very proud of you and Dipti. Both have been doing excellent work, and we wish you all the best.
Thank you, sir. We need a blessing. Yeah. So, Mr. Bala, you can take over. Yeah.
Good morning to all of you.
Good morning, sir.
I have a great pleasure in welcoming you all for today's morning session on behalf of myself and also on behalf of Mehta Mehta. Today's topic, although it appears to be simple, what is there in the filing, but the importance of this is because the company's framework actually says in annually every company is required to file these 2 important annual filing statements after the annual general meeting is over. What is this annual return, which is MGT-7 or 7A, whatever is applicable? It is basically to give the brief about the company, register office, where is it situated, who are the officers of the company, what is the shareholder pattern, and the various other details. In addition to that, whatever the company has actually faced any non-compliance issues, that means any fine, penalty with the various authorities, etc., it is actually giving, that is the annual return about the brief about the company. When it's come to the AOC-4, AOC-4 is actually nothing but it is an annual financial statements, which comprises of not only the financial statements, financial statement meaning it is balance sheet and the profit and loss account and cash flow statement, along with the auditor's report. And again, the company has to require to file the statement of change in the equity. And again, it has to file the reports of the board of directors. The board of director report has got various annexures giving from the consumption of the power consumption, technological development, absorption, etc., plus your foreign exchange management, etc. If the company has got the subsidiaries, then the subsidiaries statement in the form AOC, what is required to be attached, and the CSR where it is applicable, all those things are all there. So here the filing, although it is done by and large, you might have noticed, what happens is, by and large, many of the companies, they conduct the AGM only at the fag end of the month, that is in September. Then immediately there are a lot of rush of filing the documents, etc., and all these things are happening. There are various possibilities of committing the error. There are possibilities of not attaching certain things which is required to be attached. All these things happens. Of course, company is doing their best, and again there is a certifying professional. They have to also do the job, because it is very important for the certifying professional to see everything is all right, everything is attached, because they are ultimately certifying to the what the company is actually filing is actually correct. So these are the issues which are actually involved. If you have seen in the past for the last 2-3 years, due to some reason or other, maybe COVID-19 pandemic situation, unfortunate things, technical errors in the MCA, etc., the MCA has been granting exemptions on the date beyond the filing date. I think 30 days for the financial statement, 60 days for the annual return. They've been giving the extension the past. Unfortunately, this year there is no extension has been given. Although there has been quite a couple of representation has been made by many forum, including our own institute, the exemption has not come. Issue is we are supposed to do the right compliances. If you don't do that, then it involves a lot of fine and penalty. The penalty can even go up to the extent of 100 rupees per day for the default continues. Of course, there is subject to certain maximum limit is available. And the company fails to file for the last 3 years or something like that consecutively, then the directors, they are actually have to be disqualified. Their deed will be made invalid. They cannot become a director, even any other company. And again, after the 2 years, the company will be actually moved to inactive company list. And the 3rd year, the ROC may take up the strike-off options, closing down the company. All these things are all very much involved in this. So from that perspective, it is very, very important. But coming to the investor point of view, stakeholders point of view, the documents is very important because the financial statement are nothing but a progress report of the company, what has happened in the last 1 year. Because giving the information about the company is the annual return, but the financial statement, it gives you what is the progress has been made by the company in the last 1 year. What is the revenue? What is the profit? What is the expenditure? What is the surplus available? What is the distribution done? What is the dividend it recommends? What are the company's prospectus? What are the company's threats, etc. It gives you on the whole everything. It is looked upon. It is very important, especially for the listed companies, even for unlisted public companies. Of course, private companies, publics are not much interested, but still, these are other requirements. So there are a lot of do's and don'ts. There are a lot of care which is required to be taken while doing that. There are 2 parts. One is actually from the company's part where the company secretary is there. Wherever the company secretary is not there, the concerned officer, director, everybody. And the other part, the certifying professional, that is practicing company secretary. So let us see, Ravina is going to take over one after another on a financial statement as well as the annual returns. So we will understand what are the intricacies, what are the procedural aspects which are involved, what are the requirements, etc. We will go over that. And we have a eminent faculty, Pooja, who is there today, and she is well experienced in this field. They have been in the practicing firm. I would like to request her to share her thoughts before we commence the presentation. Over to Pooja, please.
Thank you so much, sir. Am I audible?
Yeah, very much.
Yeah. So thank you, sir. And good morning, everyone. I'm Pooja Jain. I'm an associate partner in Himanshu Kapadia and Associate. And it's indeed a pleasure for me to join all of you for this presentation. And I'm looking forward to the Ravina's presentation, as well as to also share my more than a decade of experience in annual filing with all of you. So as Professor Bala explained, what is annual filing? But why is it important? So to start with, the financial statements and board report, along with all its annexure, is one of the first documents that stakeholders refer to understand the performance of the company. Further, if there is non-filing, then along with penalty, the effects of non-filing are manifold. Like you can say, firstly, if it's a private company, then all the exemptions given to a private company by the MCA are withdrawn. Secondly, of course, it leads to penalty like all other non-filing. And lastly, if it is not filed for more than 2 years, then the company is rendered as inactive company. And if it is continuous for 3 years, then the directors are disqualified. Further, also what we need to understand is the intricacies or the details that are mentioned in annual filing forms is also very important, because forms like AOC-4, AOC-4 CFS, AOC-4 XBRL, they are not allowed to be refiled. And it is only allowed when there is, reopening of accounts by approval of tribunal. So you can't refile those forms. MGT-7 you can refile, but ultimately it is also the penalty or the additional fee that you will incur. So that's the reason it is not just important to file annual filing forms within time, but also whatever details you are mentioning in annual filing, it needs to be perfect, because you can't change it later. So I think so that would be it from my side. I'm looking forward to Ravina's presentation. I request Ravina to take forward.
Certainly, ma'am. Thank you so much. Good morning, everyone. Myself, Ravina Dugar, partner in Mehta. So I'll be talking about the intricacies of filing MGT-7 and AOC-4. I would like to start my presentation. So what is annual filing? Annual filing is forms which are given by the company to all the companies under Companies Act 2013, stating its financial statements along with director's report and annexures and annual return of the company under Section 92 of Companies Act 2013. I'll tell a brief about financial statements. So what is financial statements? Financial statements are written records that convey the business activities and financial performance of the company. Financial statements are often audited by government agencies, accountants, firms, etc. to ensure accuracy and for taxation, financing, and investing purposes. Primary financial statements include balance sheet, income tax statement, and cash flow has recently been amended. Like for all the companies now cash flow is mandatory to attach in the financial statement. Non-profit entities use a similar but different set of financial statements like income and expenditure statement. What is annual return? Annual return is a publicly available document required to be prepared by every company every year with the information available as at the close of the financial year. Like when the financial year closes on, for some companies it's financial year, and some companies on the calendar year. It is not a financial document, rather it contains general information about the company, about its member, activities of the company, and other useful information. The annual return is filed with the registrar of companies within 60 days of holding AGM or the earlier date in form MGT-7 and MGT-7A. So basically, annual filing refers to the filing of audited financial accounts. Mind you, audited. The annual filing is filed for audited financial accounts only of the company along with director's report and annual return of company in MGT-7, 7A with registrar of companies. So what happens if the annual return is not filed? Consequences for default for directors. In case of a company has not filed its annual return for 3 continuous financial years, then every person who has been a director or is currently the director of the specific company could be disqualified and also put fine and imprisonment. Fine can be of ₹50, not less than 50,000, and it might extend to 5 lakh rupees, and imprisonment up to 6 months, or it can be both. For company, penalty is 100 rupees per day after the default, or to the major extent, it can go to strike off also, where the bank account of the company will be frozen, and the registrar can also issue a notice to the company and initiate strike off of the company from MCA records. But this happens very rarely. Normally, company pays the penalty and gets off with the consequences.
In the recent past, there are a lot of ROCs, especially ROC Ahmedabad, ROC Bombay, ROC Delhi, ROC Bangalore, ROC Chennai. They are all meticulously, regularly scrutinizing whether the company has filed the financial statements and also annual returns. If they are not filed, they are issuing the show cause notices to the company. They are issuing the adjudication notice to the companies are being penalized. The penalty, as Pooja puts it very clearly, and Ravina also says it, it is actually starting with the 10,000 rupees for the company, and again 100 rupees per day till the default continues. There has been n number of cases which are actually there. In fact, some of the case laws she will discuss here. So it is not only fine and penalty, the enormous amount of the time the company has to spend receiving the notice, replying the notice, analyzing it, and appointing the personal representation, and meeting the personal hearing, and again getting the order, again filing the fine, and again paying the fine and penalty, filing the various forms. Whereas the company is supposed to do the business. Instead of company spending the time on doing the business, company will be spending enormous amount of the time in litigating the matter. That will be the consequences which is coming. So from that perspective, the company has to take care that you be file the things in timely. That is required here. Go ahead, Ravi.
So first we'll discuss about the financial statement filing. So why it is important to file AOC-4? What are financial statements? Financial statements are formal records of the financial operations and position of the company. Financial statements provide true affairs of a business to shareholders and investors. The basic objective of financial statements is to provide information about the financial health, growth, and modifications in a company's financial position that will be useful to a wide range of stakeholders in making business decisions. When there is merger and acquisitions, we see companies first look into the financials and the financial position of the company to decide whether the company is profitable or not. As we see, financial statements prepared and filed annually are the most important means of communication by the board of directors with its shareholders. Mandatory disclosures to financial statements include board report, auditor's report, is a method of providing information to the shareholder and the public about the financial activities and the position of the company. Through this only, if we see in the share market, the share price of the company goes up and down. Financial statements are useful to all stakeholders, investors, financial institutions, as they provide true position of the company and help to make informed decisions. And that is why the companies make statutory get it audited by a statutory auditors so as to provide true and fair value to the shareholders. What happens if financial statement is unadopted? As I have told you before, that AOC-4 is filed when the financial statements are adopted. But by adopted means approved by the shareholders. But what if the financial statements are unadopted? When AGM was held, if the AGM is held properly on time, if the AGM of the company was held and convened as per the provision of the Act, and financials laid in the AGM for approval could not be approved by the requisite majority of the members. AGM is held on time, but it is not approved by the requisite majority of the members. Then what happens? The filing will be done or not? The unadopted financial statements together with documents required to be annexed therein shall be filed with the registrar within 30 days from the date of AGM. Even if the financial statements are unadopted, the unadopted financial statement documents will be filed in AOC-4 with the registrar within 30 days, stating with the reason that why it is unadopted. When AGM was not held, if AGM is not held due to any reason and consequently the financials couldn't be present before the shareholders for approval, then the financial statements along with the required to be attached documents with the clarification letter stating reason for not holding the AGM is filed with the ROC within 30 days from the last date before which the AGM should have been held. Even if AGM is not held, then also financial statements has to be attached, filed with the ROC within 30 days, stating clarification letter that why AGM is not held.
That means here, there are three circumstances we can actually visualize. One is, there is an annual general meeting of the company has been held. financial has been actually adopted by the shareholders, then within 30 days, the financials are actually filed. That is one situation. The second situation is the annual general meeting has been held, but some reason or other, the financial are not adopted. So then also the unadopted financial statements are required to be filed with the registrar within 30 days from the date of such AGM. Third situation, AGM itself is not held. If the AGM is not itself held, then again, what is the due date of the AGM that should have been held? From that date onwards, within 30 days, the unadopted financial statements are required to be filed with the register of companies, which means the filing is actually mandatory. Whether it is adopted or unadopted will depend upon the situation, what is happening in the company. That is the bottom line of the thing. So filing is actually compulsory. Yeah. Pooja, anything you want to add?
No, sir.
So, according to the CLB circular letter number 35 by 9/72C, dated February 2nd, 1974, stipulates an open-ended timeline to hold adjourned AGM. The same was overruled by the Honorable Court of Calcutta in case of Bijoy Kumar Karnani versus Assistant ROC 1985 58 Companies Case 293. In this case, the Honorable Court did not accept the contention that an AGM could be adjourned beyond the statutory period limits as laid down in Section 96 of the Act. So based on the above discussion, it could be concluded that the companies are required to file unadopted financials to the ROC along with the prescribed attachment. It is also clear that filing of adopted financials after the filing of unadopted financials would be a mandatory requirement. So the company cannot just go away with filing unadopted financial statements within 30 days, but after the financials are adopted, then the company has to file adopted financials, be a mandatory requirement, and any avoidance of the same would be a non-compliance under law, leaving no room for impunity.
There is one question has come actually. On Sankita is asking a question. I have seen ITR, there is a statement whether financial statements accounting policies are adopted in annual general meeting. But there is a possibility, especially in case of the first annual general meeting, that ITR is being filed before AGM date. Then what is the relevance of ITR declaration and what are the implications of holding AGM after filing ITR? See, in which case I think board of directors have to actually decide that they are actually adopting the financial policies which they are required to declare in the notes to the financial statement which are actually there. Even if your unadopted balance sheets actually filed with the ITR, that notes will still contain, but it is only subject to auditor's report because it is not adopted. So in which case, the policies which are actually framed by the board of directors, which is actually consistently applied, that will still hold good. Maybe the income tax department would like to seek a confirmation later whether AGM has been held, the financial statement adopted. That is the thing. Because basically the directors who decide what is the policy, they need to apply consistently. That is what I think so. Yeah. Yeah, go ahead.
So we'll be discussing over here the filing time limit for AOC-4, AOC-4 CFS, and AOC-4 XBRL. Financial statement adopted at the AGM along with the consolidated financial statement within 30 days of the AGM along with the fees or additional fees as prescribed. In case of OPC, the time period shall be taken as 180 days from the closure of the financial year. In case of an adjourned meeting, within 30 days of the adjourned AGM along with fees and additional fees as prescribed. If financial statements are unadopted within 30 days of the AGM, the financial statements along with the documents will be considered provisional till the time the adopted financial statements are filed. If AGM is not held, within 30 days from the date when the AGM should have been held, along with the fees as prescribed. The financial statements along with the document and the reason for not holding the AGM have to be filed. Under normal circumstances, 30 days from the last date when the AGM should have been held would be 29th October for this financial year. So now we'll be discussing about the forms. Form AOC-4. So every company to file with the ROC a copy of financial statement along with the director's report and any other documents or annexes required under the Act. Time limit for filing is 30 days as is discussed earlier, and the mandatory attachment is copy of financial statement duly authenticated as per section 134, along with board's report, auditor's report, and other annexures like CSR report if the company falls under CSR. Company CSR policy as per subsection 4 of 135. Sir, should I open the form and show?
Yeah, you can.
So, form for filing financial statement and other documents with the registrar. So this is how the form looks like. So first we have to provide the general information of the company, that is SIN number, name, and it gets pre-filled like name of the company, address of the registered office, and email ID. So if we want to change email ID in the master data, this is the form where we can change the email ID also.
The moment you put the SIN number, everything get automatically
pre-filled. Correct.
Yeah.
So like if the financial statement, we have to write the financial year to which financial statement relates, the date of board meeting in which financial statements were approved, and nature of financial statement. So here we don't have to give the AGM date, but the board of directors meeting where the financial statements were approved. Date of signing of reports by the auditors, date of board meeting in which board report was approved. So we have to give every details, every date of the meeting as and when the financial statements and board report were approved. So over here they ask about AGM date. If it is held, then yes, no, not applicable accordingly, and with the date. So if there is a subsidiary company, then we can write yes. If the company is a subsidiary, then we can provide in the 9A detail, number of auditors and the auditor details over here, type of industry, which kind of industry the company is in.
I think that will be as per the NIC code, correct?
Yes. Yeah. That will be as per NIC code. If the if the company is having subsidiary, joint venture, or associate, then we have to write yes, whether in the question number 12, that whether consolidated financial statements required or not, whether company is maintaining book of account and other relevant books and paper in electronic form. In this question, there are many queries arise that if a company is maintaining in a software, then that comes into electronic form or not. So, sir, I would like to answer this, you to answer this question, that if a company is maintaining a software and where they are maintaining the registrar and the meetings, that comes into the electronic form or not?
Pooja, your input?
Sir, according to me, it would be in electronic form if it is only maintained in the software.
Yeah.
And wherever you maintain the server of that software, so that would be the actual place where you will, the details, the address and everything that you mentioned here would be of the server where the data is maintained.
Yeah, the requirement is whenever the inspection takes place, whatever the form you are maintaining in the software, that is actually capable of opening and it is displaying as it shows in the physical mode all the information available. If that condition is actually satisfied, yes, it is in electronic. There's one question is there, if the financials are not audited, then what is the course of action? Unaudited financial statement. You have to file the provisional financial statement, you have to file. Now, once the auditing is done, then you have to file the final. Till such time, you have to file the unaudited financial statements. But you have a time till 30th of September, because if the first AGM you call it, and the financial are not audited, you adjourn for that particular item. And the adjourned meeting, you get the audit approved, audited financial statement, you file it. If that is also not done, then you have to file the unaudited financial statements. Yeah. Go ahead, Ravina.
Yeah. So after that, we have to give details of long-term loans and advances. Then financial parameters. And there are options where we can give all the details by seeing the balance sheet of the company and the financial statement of the company. Then share capital raised during the reporting period, if any, through all the options are given through which the financials can be, share capital can be raised. Financial parameters of profit and loss account items. Then details related to principal product or services of the company. Over here, we have to give the details related to principal product, total number of product and categories, and its NIC, ITC and NPC 4-digit code, and the details of accordingly. Over in the segment 3, we have to report. We have to give the report of CSR, corporate social responsibility, whether CSR is applicable or not. Accordingly, we have to write the turnover and net worth of the previous year. So after that, in the segment 4, we have to give the disclosure about related party transaction. Like if there is related party transaction, then the number of contracts or arrangement or transaction not at arm's length basis, and if it's at arm's length basis, then the details accordingly. If the in case of a government company, if the Comptroller and Auditor General of India has commented upon supplemented the audit report under section 143, we have to give yes or no. So there is a applicability of we have to see the applicability of CARO. If the CARO is applicable, then whether auditor has been qualified or has any reservations or contains adverse remarks. If yes, then we have to give that. If there is no adverse remarks, then no. And whether company's order CARO applicable, yes or no. If the company has if the company is applicable to CARO, then yes. If not, then no. Then if the secretarial audit is applicable, then write yes, otherwise no. Then this disclosures with respect to director's report. If there is any disclosures to respect of director's report, then it has to be attached with, but the board's report has to be attached in the attachment section.
There is a question has come. What are the transactions generally shown in AS 18 as per P&L and balance sheet parameters? I think AS 18 is actually pertaining to related party transaction, I believe. Isn't it? Veena, are you there? What exactly is your questions? Because you are talking about the parameters, but AS 18, I believe, if I'm not mistaken, it is actually related party transaction.
So is the question whether like in AOC-4, what figures are to be mentioned under the AS-18 head, or what comes in AS-18, Veena?
No, I do not know. The question is only
so Veena, if you can clarify.
What are the transactions generally shown in AS-18 as per P&L and balance sheet statement? That is what it is there. Veena, are you there?
So it is in this one. Gross value of transaction as per AS-18.
Yeah.
So.
Yeah, go ahead.
So should I go ahead?
Yeah.
So this question is about this gross value of transaction as per AS-18.
Yeah, that is right.
Right. So I think she wants to ask that which transaction we can show in this point number 22 as per Mother P. This is not it doesn't include PL, but it is asked about balance sheet parameters. So what we have to write in this particular thing, if there is any related party transaction and it's an arm length basis, so will it come in this point or it won't come?
Yeah,
Like,
it will come.
which transaction we have to write in this gross value of transaction?
See,
as per ASAP?
whatever the related party transaction which has been actually transacted, approved the audit committee, that all will come in the gross value. Because they are simply asking what is the related party transaction in its gross value. That is the question which is asked here.
So, sir, basically, what practice we have been following is that in the notes to accounts, you get AS 18, right?
Yeah.
Here, what they're mentioning is gross value of transaction as per AS 18.
Yeah.
So, it does not talk about a 188 or 184. So, ultimately, in the notes to accounts of your financials, where the auditor would have given the AS 18 transactions.
Yeah.
So, from there, in the financial parameters relating to balance sheet, whatever outstanding figures which pertain to the balance sheet are mentioned under the financial parameters of balance sheet.
Correct.
And the transaction which are during the year, say rent paid or in those which are P&L items, that will go under the P&L head.
Correct.
Right.
So that is practice that we follow.
Okay.
Yeah, because it is asked financial parameters, balance sheet items as on financial year end.
Yes. So this is the outstanding figures would come here.
Correct.
Veena has replied actually. Yes, I got it. Thank you. Yeah.
So
Okay.
we were discussing about the attachments. As we said, a copy of financial statements along with the board's report, auditor's report, and other documents is mandatory attachment. And non-mandatory are if the company has CSR policy, then we have to give the CSR policy and details of the other entity. If there are subsidiary or associate companies, then CSR entity. If they have CSR activities, details of remaining CSR activities which are already remaining, and any other option attachment if there. So like in the declaration, we have to write the resolution number and dated resolution number where the board of directors are given the authorization to sign the form to put the DSC of in the form AOC-4. That resolution number along with the date has to be written over here, and then we write the designation. Whether the form is signed by director, manager, secretary, CEO, or CFO, its DIN number, PAN number accordingly, and then certificate by practicing professional.
I think at this stage the pre-scrutiny will take place. If there are any issues, it will throw out the pre-scrutiny. Then probably if anything comes out, probably the rectification will be required before you affect the TSC, I believe. Yeah.
Right. So it can be certified by chartered accountant in whole-time practice, cost accountant in whole-time practice, or company secretary whole-time practice. So this is about this form.
Then what question has come? Where the company has holding and subsidiary and consolidated financial are to be filed in AOC-4 CFS, CARO applicable or not? In some cases, in standalone financial, CARO is attached, and AOC-4 CFS, CARO is not given or not attached. CARO applicability will depend upon as per the criteria. No? Yeah, whether CARO is applicable or not applicable, we cannot answer that question because CARO applicability will depend upon the eligibility criteria which is to be fulfilled. That is what I think so.
So usually, sir, what I've seen from most of the balance sheet that I have filed is in case of consolidation, CARO is not applicable. And for standalone, it will of course depend upon the criteria that are given.
Yeah, CFS it is not applicable. CFS
Yes.
it is not.
Yes, sir.
CFS it is not. But a standalone, yes, as per the criteria, yes, it will be. And you have to file it. And it consolidated, once you file the standalone balance sheet, then you have to file the consolidated, but CARO is not applicable.
Okay, so there's one more additional question, I think so, from Shruti.
Yeah.
So during the year transaction, Shruti, whatever pertains to P&L, that you have to mention in AS 18. So that if you see, they've given two heads, like one is for balance sheet and one head is given for P&L. So during the transaction will go in P&L head and outstanding will go in balance sheet parameters.
Then there's another question. Whether all the NPCs are required to file a form AOC-4 NBFC. NBFC, I think if they are actually falling under that index, then probably AOC-4 will be applicable. Otherwise, the form 23 ACA will be applicable, I believe. Am I correct?
So I have very limited knowledge relating to NBFC, so maybe I'll have to refer and get back on this.
Yeah. If it is index, definitely it is AOC. If it is not, in which case there is a form is there. I think ACA 23, ACA 23A or something like that. That is actually the audited financial in the physical form, which is actually transferred to the PDF form, which is actually filed. That is what it is required here. Yeah, somebody is answering AOC-4 NPSC is a separate form. Okay, if it is applicable only, you have to file AOC, otherwise it is not. Because there has been a circular by the MCA that which are the companies which are actually covered in case, which are the companies which are not there. If you are falling under that criteria, yes. Okay, now Sangeeta saying for NBFC, separate AOC for NBFC form has been decided by MCA. We should make use of it. Yeah, if the form is available, then you should do it that only. Because I do not have the knowledge about this recent one, but I think it is only when I was also working in some of the NBFC companies associated, where we used to file the PDF converted copies for NOC when they are not covered in the details. Yeah.
So I'll resume. Now we'll discuss about AOC-4 CFS. That is, this form is applicable to consolidation companies having subsidiaries, associate company, or joint venture. Exemption to filing of AOC-4 CFS is for intermediate subsidiary companies subject to Rule 6 and companies having only subsidiaries incorporated outside India. Time limit is the same for AOC-4 CFS, that is within 30 days of AGM, and mandatory attachments will be consolidated financial statement duly authenticated as per section 134 and statement of a subsidiary or associate company or joint venture as per section 129 in the form AOC-1. Next is AOC-4 XBRL. So XBRL is applicable to listed companies of any stock companies which are listed on any stock exchange and its Indian subsidiaries, companies with paid up capital of rupees 5 crore or more, or companies with turnover of 5 crore or more, all companies required to prepare their financial statements in accordance with Companies Rule 2015. Other companies can also file their financial statement in XBRL format voluntarily, but once filed in XBRL format, they would be required to file subsequent financial statements only in XBRL format. So mandatory attachments to AOC-4 XBRL is XBRL financial statements duly authenticated as per section 134, including board's report, auditor's report, and other documents, consolidated financial statements, if any, AOC-1, statement of subsidiaries, and approval letter of extension of financial year or AGM if applicable.
One more thing has come here. Here they say so the NBFC AOC-4 NBFC form has been introduced 2 years. You are right, actually. The NBFC AOC-4 form, again, it is applicable to those NBFCs which is actually following index. Otherwise, it is not. If you see the circular issued by the MCA, I remember it is very categorically saying the NBFCs which are actually following, required to follow index accounting, then they have to file this form. That is what it is there. Can you please take up AOC-4 CFS form, please? We will see if the time permits, we can see. Okay. Turnover is 100 crores or more. That is what the question is there. Yeah. Yeah, if it is 100 crores or more, automatically they have to follow index. Because the question is actually index requirement. If index requirement is there, yes, it will be in AOC-4. If index requirement is not there, then the physical format, that is what it is. Okay. Yeah, that is all I think so. Anyway, if we have the time available, that we can open and see the AOC-4, NBSC form. Yeah, we'll see that. Okay, go ahead.
So filing fees, as we can see, it varies in from the nominal through nominal share capital. If the share capital is less than 1 lakh, fees applicable is rupees 200, and accordingly. So for companies not having share capital, rupees 200 is a fixed amount. The penalty for not filing AOC-4 is rupees 100 per day of default. Like after, from the penalty starts from the 31st day after the AGA. So extension in filing form AOC-4 for immediate preceding year financial 2021, the MCA has extended due dates filing annual returns 2 times via circular number 16 on 29th October 21 and 31st December 21 till 31st December 21, and then extending further through circular number 22 on 29th December 2021 till 15th February 2022. But for the current financial year 21-22, no such extension from MCA is there. Howsoever, ICSI has submitted 3 times its representation to the MCA for extension of due date for filing of annual return for current financial year 21-22, as we can see in the ICSI website also. But from MCA, we have not received any such MCA extension, and people are, companies are having the consequences, facing the consequences. So recent update to AOC-4 is companies are required to round off financial statement figures according to their total income under section schedule 3 of Companies Act 2013 from this financial year henceforth by the MCA notification GSR dated 24th March 2021. In any case, the professional shall not consider the company submission of absolute figures in e-form, such as AOC-4, as incorrect certification.
Some comment has come. MCA is not taking onus of its consisting filing system due to the technical issues. I don't think we can answer this question because this has been actually talked with our various practicing professionals who are really facing the problem. It has been taken up also. I believe some people have actually filed the public litigation in the High Court, and there was a thing was there in the practicing company secretaries actually showed in MCA office at Jaipur very recently. But anyway, here we cannot make a comment. We have to live with it. That is a situation. A subsidiary company is not able to file MGT-7. Is it okay if we file MGT-7A by attaching a letter? So if MGT-7 is applicable, how can you file MGT-7A? Because MGT-7 calls for certification. Because MGT-8 has to go along with MGT-7. By filing a MGT-7A, it is not correct. Isn't it, Pooja?
Yes, so in fact, we also had last year, we had a lot of issues in many of our companies where they were not accepting MGT-7. So ideally, you should be raising ticket for the same. And you should ensure that you file MGT-7 itself.
Yeah, because you can't just to switch over from MGT-7 to MGT-7A.
Yes,
yes. That is incorrect. Yeah. MGT-7 needs to be filed by the subsidiary of the public company. Is a question or it's a information, Sangeeta?
The information, I think she is replying to the query.
Oh, okay. Yeah.
So we move on to annual return filing, which is under section 92 of the Companies Act 2013. So annual return is filed in form MGT-7. Laws governing to this e-form is section 92(1) of Companies Act 2013 and Rule 11 of the Companies Management and Administration Rules 2014.
What question has come? What is the consequences if we do not mention about whether company is a subsidiary company?
So MGT-7 and 7A is an electronic form. MCA brings changes time to time. Like they have recently put like separated for small companies 7A and non-small companies for MGT-7. And this form is STP form, like it gets auto-approved. So who needs to file?
If you do not mention whether the company is a subsidiary, that means you are actually giving wrong information, which is not correct. Then it will actually invite, withholding the information, not disclosing the right information, etc. It is got its own consequences. So that will be looked upon by the regulator a wrongful act. Accordingly, penal action will be initiated. Yeah. Go ahead.
Who needs to file MGT-7 and 7A form? MGT-7 is filed by the companies whose paid up capital exceeds 4 crore. Earlier it was 2 crore and turnover rupees 40 crore. Earlier it was 20 crore. And MGT-7A by small companies, that is whose paid up capital does not exceed 4 crore and turnover does not exceed 40 crore rupees. So what is the purpose of filing e-form MGT-7 or 7A? Every company shall prepare an annual return in the form MGT-7 containing the basic information related to companies, its shareholders, directors on the last date of the financial year ending.
Ravina, just to go back to earlier slide.
Yeah, sure.
Yeah, here if you see, MGT-7 is mentioned for the companies which are largely a larger company. MGT-7A is actually for the small companies. As you know, in the ease of doing business, the government is actually trying to reduce lesser compliances, reducing the compliance burden for the smaller companies. So 7A is basically giving the minimum information which are actually recorded in the annual return while comparing to MGT-7. MGT-7 is required to be certified by the practicing professional, which normally is certified in the form MGT-8. MGT-7 has to accommodate MGT-8 form when you file by the larger companies. Whereas the MGT-7, no such certificate, 7A, no such certification is actually required. Because it is the concise information which is provided by the smaller companies. It can be signed by the company secretary, the employment or a director, the company secretary is not there. So it can be filed without certification. That is the whole idea here. Anyway, Ravina is going to explain the difference between MGT-7 and 7A. She will explain this in detail. Yeah.
So the purpose of filing is to give the information about its registered office, its shares.
Some question has come for checking the criteria of the small company, whether both the conditions need to be fulfilled, that is paid up capital and turnover, or one of the conditions.
Both needs to be fulfilled, sir.
Now I think as per the amended thing, both the conditions are to be fulfilled.
Right.
Yes, sir.
Yeah, both the conditions are to be fulfilled.
And word is there, absolutely.
Yeah.
We'll see over here itself. See, as we can see in the presentation also, applicability of MGT-7, the form MGT-7 is applicable to all the companies other than small and OPC, and MGT-7 is applicable to only small companies and OPC. So new amendment definition of small companies provided under section 285. The act defines a small company as a company that is not a public company and has a paid up share capital equal to or below 4 crore and a turnover equal to or below 40 crore. So this gives the answer that both the criteria is mandatory for applicability of being a small company.
Yeah, earlier one of the conditions, either or. So they have modified because people were taking undue advantages of that. So that is why they have modified it. It is both the conditions are to be fulfilled as per the amended act. Correct, no, Pooja?
Yes, sir.
Yeah.
However, the following companies are not small companies: a subsidiary or holding company, a company registered under section 8 of the Companies Act, a body corporate or company which is governed by the special act. So in MGT-7, we have to give the composition of board of directors. While in MGT-7A, there is no option to mention the composition of board of directors. In MGT-7, details of directors and KMP like designation, number of equity shares held, date of cessation, after closure of financial year, if any, particulars of changes of directors and KMP during the year has to be given. But in MGT-7A, there is no such requirement. In MGT-7, directors and KMP remuneration details required to be mentioned, whereas in MGT-7A, KMP remuneration detail is not required to be mentioned, only directors' remuneration details required. In MGT-7, Form MGT-8 is compulsory to attach where company is a listed company or a company having paid up share capital of rupees 10 crore or more, and a turnover of rupees 50 crore or above, will be certified by the company secretary in practice, and the certificate shall be Form MGT-8. And there is no such applicability of in MGT-7A because as we know that MGT-7A is applicable to small company, so that doesn't come across. So what are the attachments required to file this form? List of shareholders, debenture holders, copy of MGT-8 if applicable. In case a list of transfer exceeds 10, like transfer of shares exceeds 10 transfers, then submit a separate sheet of the list of transfer, whether in the physical format or in CD or digital media. Approval letter for extension of AGM, if any.
There's a question has come. Small company modification criteria of the capital and turnover are applicable from which financial year? I think this modification has come somewhere in the month of September 22. When you say September 22, and also it says it is actually with the immediate effect, if I am not mistaken.
Yes,
so
sir.
that, yeah, if that is the case, this will be applicable from the current year 22-23.
Current.
Yeah. Whether the PCA is required to generate UDIN if she is certifying Form MGT-7.
Yes, it is required.
Yeah, it is required actually. List of shareholders. Can some of a minor be entered in the register of shareholders of the gifted shares and be listed in the list of the shareholders in Form MGT-778?
So I think so. If you mention the name of the minor, you also have to mention that who is the guardian. Like
guardian is to be
the
mentioned. Yeah, guardian is to be mentioned. Yeah.
yeah.
Because minor himself cannot be a shareholder. Minor has to always be accompanied by the guardian. Yeah.
So we'll move to certification before filing, that is MGT-8. So format prescribed in rules MGT-8, there is a format of MGT-8 certificate by a company secretary in practice. So mind you, Form MGT-8 can be certified only by a practicing company secretary and no other professional. Certification disclosure on facts correctly and adequately of that company has complied with all the provision of Companies Act 2013. So it is applicable to listed companies with paid up share capital of 10 crore or more, and companies with turnover of rupees 50 crore or more. It is submitted as an attachment to annual return in Form MGT-7. So due dates for filing MGT-7 and 7A are within 60 days from the actual date of AGM or due date of AGM, whichever is earlier. The last date for conducting the AGM is on or before the 30th day of September after closing of every financial year. So basically for this year, for financial 21-22, the last date for filing of Form MGT-7 is 28th November 2022, which is very nearby. Almost we have completed half of the month. So nearly half of the month is left for filing MGT-7.
One question has come. Do we need to attach the UDIN generated to MGT-7?
So you need to generate UDIN. Ultimately, it's your choice whether you want to attach or whatever practice your firm follows. Like in our firm, we follow this practice that Whatever email comes, we attach it with the MGT-7.
Okay. Can you also take up the cost audit, cost records applicability if they have time permits? No, I don't think today it is possible, but if we can take it in the later, we can have a session on a cost audit separately. Even in fact, in the past also, we had a session in the cost audit. So that cannot be taken today. Maybe we can schedule some other day. Yeah.
So in case of one-person company, within 60 days from the completion of the 6 months from the end of financial year, that means due date will be 60th day from 27th September 2022. OPC does not require to hold agent because OPC means one-person company. So filing fees is same as it was in AOC-4. For the company not having a share capital, the MGT filing fees is rupees 200. Penalty is same as it was in AOC-4, 100 rupees per day of default. Hence, it should be ensured that the annual return in the form is filed before the due date.
Yeah, the certifying professional has to be very, very careful because when it comes to the certification, because I have seen some adjudication orders passed by some of the ROCs. In one of the MGT-8 form, the certifying professional has actually mentioned, I think it is relating to the private companies. He said actually, although the notice to the AGM has been told, it has been actually sent, the actual proof of having sent the notifications, notice issued, which is not actually made available for record, for inspection purposes. It was an observation which he has mentioned in the MGT-8. Based on that observation, the adjudication officer has initiated action against the company. Company has been told actually whether you have issued the notice. Please show the proof that you have issued the notice. The company was actually unable to show any proof of having issued the notice, and ultimately the companies were actually penalized. Company and its director, they were actually penalized. So really speaking, it is not only document is actually issued, but the preservation of the documents is also required to be kept that the job is done. There is always a saying, it is not enough to say justice is done. It is also to be shown that justice has been done. So here it is very important from that perspective. It is actually from the certifying professional also very careful. And even the companies also has to take care to preserve the documents. They cannot take it as casual because nowadays left and right, the regulators are taking action for non-compliances. Yeah. Oh, go ahead, Ravina.
Okay, so there is one more question. Actually.
Yeah. While giving percentage of the shareholding of the director, should we consider both equity and preferred share together, or it will be only equity share? I think the form equity is separate, equity, this preference is separate, no? If I'm not mistaken. The,
Yes.
the form itself, its category is separate actually. It is not combined, I believe.
So in the form, the equity and that is only one column. So we usually write both of them combined, and we also give a clarification is attached in the form itself.
Okay.
So we can see the form. I have just opened the form.
Yeah.
So this is form MGT-7. Over here also same will file SIN number of the company, and it will be automatically pre-filled. We have to give the PAN of the company, registered address comes, email ID of the company. So over here also, if you want to change the email ID of the company in the master data, we can change over here, and the email ID will change in the master data. If the company has a website, then the website, the link of the website, type of the company, category of the company, and subcategory of the company has to be given. Financial year from which date to which date the annual return is, we are filing for the annual return. Principal business activity of the company has to be written over here. Particulars of holding subsidiary and associate company, if there is any. Then share capital of the company, if there is any transfer or anything, you have to give the transfer details. debenture details, turnover and net worth of the company, number of promoters, detail of directors. It is distinguished as executive and non-executive and other category of the director. Number of directors and KMPs as
So
on the
Ravina, sorry to interrupt, but the heading which went above, yeah, year. So I think so. The question, the directors column that you showed, no? Yeah. So here the percentage of shares held by directors at the end of the year.
right.
So that is the, I think so, the question that here whether the both the equity and preference should be considered while you mentioned the percentage, or only equity should be considered.
Right.
What is the practice?
I think both.
Both.
So in our firm, sir, we mention both together because they just don't talk about the voting rights. They mention about the percentage of shares.
Okay.
Shares would include both equity and preference.
Equity and preference.
Any participants would like to share their experience on this? What they do here? Somebody is writing summaries to be given in shareholders detail. So he is talking about this, the directors detail. While giving the percentage of the shareholding of the directors. That is what he is talking about. So I think as per Pooja, it is actually both. So I think because there is a column is not there separately, I think it should be given both. Yeah.
So over here also, sir, in when we write number of equity shares held, then specifically equity is mentioned, and that is why we don't write over here for both, only equity shares of the director, the director which holds the number of equity shares.
Here Sangeeta, Sonali, both are also saying that it should be both. That's what they are also saying. Yeah.
So yeah.
So Bala, there is a little logic when they are mentioning only shares.
Yeah.
It should include preference also.
Yeah.
Because with preference shares, if dividend is not paid for some years, automatically they acquire the voting right. Probably that gets properly reflected in the percentage. That might be the reason.
Yeah, you are right. Absolutely, I agree with you. Because if the preference shares dividend was not paid particular years, then automatically they get the authority for the voting right. Yeah.
Yeah. So maybe just to derive what is the percentage of voting right automatically.
Yeah, I agree.
If there is a difference.
Yeah, I agree with you.
So over here we mention details of directors and KMP as on closure of financial year. Yeah, like if as on 31st March 2000, as on 31st March of the financial year, the details of directors and KMP has to be given. And if there is any change during the year, not after the closure of financial year, but if there is any during the year changes, then we write over here. And if the director is ceased after the closure of financial year, then we have to provide the date over here. Like after the closure of financial year till the AGM date, if there is any cessation, then we have to write over here. Meeting of members, class of members, board and committee meetings. So we write over here the board meetings, how many meetings were held, and over here the committee meetings, and above all it's general meeting, how many general meetings were convened, along with the details. Remuneration of director and KMP. So we write over here remuneration of managing director, whole-time director or manager. And over here, a number of CEO or CFO and CS whose remuneration details to be required.
There is a question has come while counting the members. Should we consider equity members count separate and add the preferred shareholders separate? In fact, when you talk about the members, according to me, equity shareholders are actually the members of the company. Correct? So naturally, it should be only the equity shareholders, not the preferred shareholders.
So it depends upon which meeting it is, no? So
Exactly.
when you say if it is an annual general meeting,
Yeah.
so obviously only the
Equity
equity
shareholders,
shareholders
because
are entitled to
yeah,
attend.
that is it. That's it. So naturally, the member means it is only a annual general meeting. It is, as you rightly say, if any other class meeting where the preferred shareholders are interested, then in which case, yes, their count will be taken.
Right.
Yeah.
No, here also, Mr. Bala, again, if there is a default in payment of dividend on preference shareholders, and if they are entitled to, maybe we have to include
No,
them in
that,
counting the
no,
number
that
of
will,
members.
that will come only when they become eligible. Till then, it is not.
Absolutely, absolutely, absolutely,
Yeah.
absolutely.
Once the default happened, they become eligible, then only it will come. Otherwise, it won't.
Yes,
come.
yes,
Yeah.
yes, absolutely.
Yeah, that is right. Thank you, Nikhil.
Yeah. So we after giving the remuneration details of CEO, CFO, company secretary, or any other director, the form asks about penalty and punishment details. If there is any penalties or punishment imposed on company, then we have to write over here. If not, then we can select nil. Complete list of shareholders, debenture holder has been enclosed as an attachment. If yes, then or other else mark, we can mark no. If MGT-8 is applicable, then we have to write the name of the practicing company secretary and its details. After that, this form is this form is signed by the either by the director or by the director and the company. If there is any company secretary, whole-time company secretary, then by the company secretary, or if there is no company secretary, then company secretary in practice. It can be signed by both. If there is any company secretary there, that the company secretary can also sign, or if he doesn't want to sign, the company secretary in practice can also certify.
Can the same person be the director, CS, and the CFO? CS can be a director, CFO also can be a director. And the CS and the CFO, in fact, the Company Act says there is a whole time KMPs. If I go strictly in the spirit of the law, but in some of the companies, there are combination of the positions, CS and CFO. There, even some of the listed companies, it is actually seen in practice. I have seen in some of the companies. So, really speaking, if they say director and company secretary, there should be two different individuals. It cannot be the same person. Your view, Pooja?
Sir, I completely agree with you. Like, since they use the word whole-time employment, so ideally the CS, the CFO, and the managing director should be three different people. They can be, the CS can be director, or that person can be a director, but not CS or CFO. They shouldn't be same, but many companies do have that combination.
Yeah, I have seen even some of the listed companies, they do have that.
Yes,
but unfortunately, ROC has not raised anything. So long as going is good, If one day or other, if it comes up, then they'll have to face the music.
Right.
That's what I think.
No,
Nikhil, your thought?
I think for the listed company, even I am surprised. I haven't noticed such things.
Yeah.
But it has to be a separate one. Like a CFO could be a director, full-time director kind of a thing. But CFO and CS cannot be the same.
I have seen actually in some of the companies.
Which company? I mean, if you can just share. Because I too keep observing, but I haven't noticed this. That's why I'm a little curious to know about. But my personal feeling is, yes, it has to be a different.
Yeah, I also feel like that only. But the thing is, yes, it is unfortunately few companies it is there. I'll share with you. Not
Sure.
in this forum. Separately.
Okay.
Yeah.
No, but my personal view is, yes, it has to be different.
Yeah.
And I think that is what, when you read the law.
Yeah. Spirit
It
of the
should
law
be
is,
like, yes, spirit of the law is that.
spirit
Absolutely.
of the law is this.
Absolutely.
That.
Yeah. CFO could be a director. CS also could be officially on the board. Those
Correct.
two you can combine, but
Correct.
not CFO and CS.
Correct.
I agree with you.
CFO on this CS designation is there. Why not? See, it is not a question of why not or why yes, because the whole idea is when you talk about whole time KMP, then combined position does not come to the whole time KMP. That is the thing. Yes, Ravina.
So I was just saying signature required to authenticate Form MGT-7 needs signature from the director and the company secretary of the company. If there is no whole-time CS, then signature is required by the company secretary in practice. So there is a question that suppose a company has a whole-time company secretary. Still, the company can get it signed from the company secretary in practice, or the whole-time company secretary has to sign MGT-7.
Ideally, it is better to have a whole-time company secretary. But I have come across in some companies, one or two companies I have actually come across. What has happened is that due to DSC, validation of the MCS site, that has not happened in the employee company secretary in one or two companies due to some reason or other. Some reason or other, they said it normally happens with the people who are actually coming from south. They do not have the surname. In some places they put. So somewhere his name is appearing, say, two names. Let us say Balakrishnan and Krishnamurthy. And somewhere it is appearing only Balakrishnan. So when the tallying is not there, it has not happened. In such companies, they have decided to get it signed the practicing company secretary. Practically, I have seen in some of the private companies, it is happening. Although whole-time company secretary is there, but due to some technical default, etc., the DSC not matched, etc., doesn't think at all. They have decided to get it from the practicing company secretary. That has happened. That has been accepted by the ROC also.
So in case of OPC, the signature by the company secretary on form MGT-7 is required, and if there is no company secretary, the signature is required by the director of the company. So
if the financials are not prepared in rounded off format, do we need to modify form MGT-7? Please opine. But I think the format itself is the rounding up. So if it is not rounding up, it's done probably, whether it is depending upon the lakhs or millions or hundreds or thousand or whatever it is, probably you have to round up and file it. That's what I believe. Am I correct, Pooja?
Yes, sir, it needs to be rounded off. And I feel that if they are not rounded off and filed in AOC-4, then you definitely need to qualify in MGT-7.
Yeah.
If any company found alleged of filing annual return which is contradicting the provision of the Companies Act, then the company has to pay fine of minimum rupees 50,000, but not exceeding 5 lakh rupees. Penal actions for wrong certification as per Company Secretary Act 1980, professional and other misconduct would be implied, and we have to face the consequences. Liable under section 447, 448, 4 and 449 with respect to fraud, false statement and false evidence and application status. So extension for form MGT-77A, MCT department has revised the due date of MGT-77A form till 31st March 22 for financial year 21 this was for financial year 2021, but then this year they have not extended any due date. So this was all about my presentation. Thank you so much, everyone. If there is any query, you may ask.
I don't think there is one less come regarding AS 18. Opening balance sheet of the inter-corporate loan given is 1 lakh rupees, and during the year inter-corporate loan given 2 lakh rupees, and the closing balance equal to 3 lakh rupees. Since the AOC-4 AS 18 balance sheet points only as for the year end figure, so my question is which amount comes in such form? Opening balance is 1 lakh, During the year, it is given 2 lakhs. Closing balance is 3 lakhs. Since the AOC-4 AS18 balance sheet points only ask the year-end figure. So my year-end figure means it is a opening balance plus transaction. That will be the closing balance. Obviously, I
3
think it will
lakhs
be
will
3
come.
lakhs. It will be 3 lakhs. Yeah. I don't know what is the doubt in this, because closing balance will be opening balance plus transaction during the year, then the closing balance. So here it is very clear, it is the 3 lakhs.
So compounding of offense under section 92, as we know that there is a penalty, there are consequences. So can the offense under section 92 and 137 can be compounded? Yes. So ROC has the power to issue show cause notice to the companies which fail to file the return within 270 days. He can ask the company to file the form and compound the offense under the sections through section 441 and ask the company to provide the reason for the same. Like till 270 days, we have seen that the company can ask for the penalty. After that, ROC has power to issue show cause notice. It has been further reiterated by the court in a similar case that once compounding of offense is done, neither the assessee nor the department can challenge such compounding order, which we have seen in S. Viswanathan versus State of Kerala 1993. So, what are the amendments? So in section 92, the new act has omitted subclause C of section 92(1), which is related to indebtedness of the company. It has also modified subclause J, which held that details of foreign institutional investor holding share of the company must be mentioned. Moreover, a proviso is added for one-person company, small company, or any other such company which has provision to introduce an abridged form of annual return. Also, now the company have to give a web link of annual return in board's report and publish the same in their website if the company has the website. So for private companies, till now making of website is not mandatory, but for listed companies and paid up capital of more than 10 crore more has to maintain websites. So in annual return, they have to mandatorily give the web link of the annual return in board's report.
Okay, some more questions have come here.
Okay.
AOC-4 CFS form, can you take if the type permits? Okay, that we'll see. While filing AOC-4, we have not rounded off. Can we do the same in the MGT-7A? So AOC-4, if you are not rounded off, I don't think you can do it in MGT-7A. Because otherwise it won't match. Isn't it?
So rounding off was only for the attachments, like in the form you had to put the details in actual.
Yeah.
And MGT-7, your financial doesn't go in MGT-7, so 7 or 7A. So and the figures that you will mention in MGT-7 would obviously be in actuals.
Okay. Actually, some are mentioning only 2 lakhs. That is, I think, that the closing balance. No, closing balance, there is no doubt. Opening plus transaction will be the thing. So mentioning 2 lakhs and all, it is not correct actually. Okay. Even if I follow your practice of adding the receipt and payments for gross value of the transaction. See, when you talk about the closing balance, it is always the opening balance plus receipts, less issues. What is the closing balance? That is what you know to take. It is simple mathematical. There is no question of anything over and about to discuss on that. Penalty is not disclosed in the audited accounts. Should be also, penalty is not disclosed in audited account, should be also given. You are talking about MGT-7, Sunil. If some disclosure is not made, that means information withdrawn, that will come as a qualification or observations. If the penalty is not disclosed. Because not disclosing certain thing which is required is really speaking withholding the information. Auditing personnel has to actually find out if it comes to his knowledge. Because tomorrow if the regulator finds out, it is not only the company, then again the practicing professional will be asked actually, what is that? You are not disclosed, what is the thing, etc. Initial action can come against him because there have been cases initiated by issuing a show cause notice to the practicing professional as well. Isn't it, Pooja?
Yes, sir. So whatever penalty is levied on the company, that needs to be mentioned in the form.
Yeah. Because if it is not finding a place in the financial, it does not mean you cannot overlook it.
Exactly.
Because your audit is independent audit. You are not depending upon the financial audit. Both have to synchronize. No, if somebody committed an error, you don't have to repeat the error. No?
Mr. Bala, what I think that penalty is not required to be disclosed as per the accounting standard. So while filing this form, it is needed, those information has to be extracted and it has to be put by filing MGT-7.
Pooja, your views?
Yes, sir. That's what, like, whatever penalty is levied, you have to show. There is no other option. Whether they are not showing in your financials or they are not required to show, that doesn't matter. That whether as per accounting standard they need to show or they don't. If a penalty is levied, we have to show in the form.
See, I really do not know if the penalties are levied. If it is paid, one way or other, it will actually find a place in the financials. And even if it is not paid, it will actually come as a liability under the provisions. So there is no question of it is not disclosed or something like that. If the transaction itself is not recorded, that is a different matter. Because as per the accounting, either it is the actuals or it is a liability. Any one of the head, it has to appear. That is the thing. And if it is not appearing, that does not give the excuse for the certifying professional from the company secretary that he can actually keep quiet, it is not disclosed. It has to be disclosed. SPRL can it be prepared in the actual rather than the rounded off figures? SPRL can it be prepared in the actual rather than the rounded off figures? If there is an option, post balance sheet events also. No, post balance sheet options means if it is pertaining to the last year, it will come. If it is pertaining to the current year, it will come in the next year. Penalties are at various level of contest also. Yes, it is written actually. If you see the form in the form, it is written actually. Even if you see the annual return, which authority, there is a specific question is asked. Whether the appeal is made in front of which authority, that is also there. Then. That is already asked for it. Yeah.
I'll continue.
In AS-18, remuneration net commission paid to directors who are promoters also used to be included. Yeah. AS-18 puts it. Somebody is asking.
So, sir, Anuradha, the thing is, in the notes to accounts, the auditor only would have given these details under AS-18. So ultimately, when you file the form, you just have to take those details and mention it in the form itself. So it will be covered. What you're mentioning is who is paid to director, who is also a promoter. But otherwise, also from AS-18, whatever details is given in your notes to accounts, that you have to mention.
One of our clients just opened the private limited, but I have not done anything. Even not deposited the initial subscription amount in the bank. Do they need to file AOC-4, MGT-7 bill returns? So if you have opened the private limited company, whether financial year is over, because the first financial year can be up to 18 months. Isn't it? Because financial year is not like the financial year, the first financial year depends upon the company decides. So up to 18 months, you can have the financial year. So whatever the financial year, if it is ended, then I think you will have to file.
So should I?
Also, there was one question about some indebtedness figure. So indebtedness includes both short-term, long-term borrowing, including secured and unsecured. It does include, but now the indebtedness head is only not there. So
yeah, that is not, that is removed actually.
Yeah.
The current form, it is not there. Current form, it is removed.
But the issue with the indebtedness can come, assuming it is a private limited, which is either a subsidiary or associate of a listed company, where Ind AS is applicable and not AS. Now, assuming, as an example, that the company has given an interest-free loan, let's say for let's say hypothetically for 2 years, 2 lakh rupees is given. As per the Ind AS, your amount outstanding will not be 2 lakhs. It could be 1 lakh 80, 1 lakh 70, based on the effective rate of interest under Ind AS. So here probably you might encounter a problem as to what would be the amount outstanding, because in accounts, amount recoverable has been split into two, principal plus interest. So I don't know whether while filing AOC or this MGT, how you would reconcile the outstanding figure.
AOC-4 filing is nothing but it is the extract of the financial statement what is disclosed, isn't it?
Yeah.
Because we are not generating anything separately in order to reconcile.
No, that's true.
Yeah.
That's true. But here, now assuming same private, let's say identical transactions are there in two clients. One is following accounting standard, one is following Ind AS. Now, assuming the company has taken, let's say, 2 lakh rupees from somebody, let's say it is interest free in both the cases. If you follow AS2, my opening outstanding 0, received 2 lakhs, outstanding 2 lakhs. But when it comes to Ind AS, opening 0, received 2 lakhs, but when it comes to outstanding, party out of 2 lakhs, let's say, I mean, since you have to discount it based on the effective rate of interest, hypothetically, let's say 1 lakh 80 is outstanding and 20,000 has gone towards interest portion, which you have to keep on reversing. And then at the end of the 2 years, it will become payable 2 lakhs and you repay 2 lakhs. Now, my understanding is probably in such cases, companies following Ind AS, you might have a difficulties in reporting same transaction. Now that is,
We are not required only to, we are not required to give indebtedness figure now. MGT-7 does not have any head where you have to give indebtedness figure.
Somewhere somebody asked, no, that opening outstanding 1 lakh, received 2 lakhs. Have I to show 3 lakhs?
So basically, see, in AS 18, whatever figure is given in the outstanding. So when you see AS 18, there is a different table where itself the auditor will mention outstanding liability. So you have to take the exact that amount given.
Yeah, if it is related to AS 18, I agree. We have to simply go by the financial statement.
Yeah, and also in that question they had asked that they are talking about taking gross figure. So gross figure is not about not taking the closing balance. You have to take a closing balance. But in case if there are two different parties in which in one you have loan given and one is loan taken, so that you cannot net off. Both the outstanding figures you have to add up.
Correct. Even in Ind AS, if I have taken a loan 3 lakhs, out of which I have repaid 1 lakh, the repayment of 1 lakh will also appear as a related party transaction separate.
But that will be
during
the party transaction.
Absolutely. So, absolutely.
So whatever is the outstanding figure, that you have to add up all the figures and that will go in the gross value of balance sheet parameters.
Correct. Absolutely.
True. Now, just I would like to draw a subtle difference. AS 18, related party transaction under accounting standard would be a little different than under the SEBI law as well as under the tax audit, I mean income tax. Just to bring it to your notice, no? So it will not be the similar in all the 3 circumstances. It will be different.
There's one more question has come. As an annual return used to be mandatorily uploaded on the website, and the link of the website is required to be given in the director's report. If instead of giving the link in the website, the company provide MGT-9, that is extra from the annual return, old requirement, as an annexure to the director's report, then whether this will be result in the fulfillment of the requirement of section 134.
According to me, yes. The reader needs to know what you have filed in MGT-9. That's available either through link or by way of reproducing as a part of the requisite. Doesn't make any difference.
Sir, MGT-9, I differ in this, that MGT-9 now has been dispensed with. So there is no concept called, form called MGT-9.
I don't think MGT-9 can be attached now because that is no longer the requirement. So you need to give the website link.
Exactly.
Because
You
website-
need to upload MGT-7 and give, not MGT-9.
Yeah, MGT-9 is no longer a requirement. This will not hold good because website link is required to be given. That is the mandatory requirement. The company has to do that. They cannot find out the alternative ways, etc. Yeah, MGT-9 is gone.
Now, moving towards our slide, that is amendments in section 137. So, new act proposes that references of within the time specified in the section 403 of the act is omitted from this section. Now, there will be no mention of section 403 anywhere in this section. In this section, there is a proviso after the fourth proviso, and exemption is provided to holding company from attaching the audited financials of its subsidiaries company in case if the foreign subsidiary which is not required to prepare the audited financials as per rules of the country of incorporation. Now the attachment which is given unaudited financials will be treated as sufficient compliance. However, it must be in English language. So, as Bala sir told about the case laws, so I have just given a gist of case laws which happened because due to the company were penalized due to non-filing or delay in filing, as we can see in Messrs. Rudraksh Synthetic Private Limited, ROC Ahmedabad. Order under section 454 STA V 5 2122 to from 5 to 5,270 to 22 in the matter of adjudication of penalty for violation of section 137. In this case, cash flow statement were not filed by the company and not filed, and company and 4 directors were penalized each rupees 5,000. So totaling to rupees 25,000.
In this case, what has happened? They missed out.
The company did not file cash flow statement along with its financial
Yeah,
statements,
they
balance
just
sheet and BL. So
Yeah. they just missed out the cash flow. That's all. Company has issued the adjudication officer has issued the notice. Company has actually gone and they have pleaded. They even went to the extent, it is an inadvertent error or something like that, because they filed the cash flow the earlier year, also in the subsequent year. But in this particular year, they missed out. They pleaded, but the adjudication officer said very clearly, whatever it is a non-compliance. That's all. So that is what I said actually. One has to be very, very careful. What are the various attachment has to go? Everything has to go. If you miss out anything, this sort of thing can happen. Yeah.
right. So next is order number ROC Mumbai EDA order 165107 passed on 3rd December 2021 by Mumbai ROC and in the matter of Royal Canin India Private Limited. Order for penalty under section 454 for violation of section 92 of the company filed penalty filed its annual return for financial 18-19 on 30th 11/2020 with a delay of 275 days. So we know we get 270. We can delay up to 270 days with the penalty. Due date for filing was 29th February 2020, pursuant to AGM extension granted by ROC till 31st December 2019, rendering the company and its officer in default liable for penal action under section 92 subsection 5 of Companies Act 2013. Penalty on company and 2 of the director each levied rupees 77,500. So the total penalty comes to rupees 2,32,500 rupees. So that's a huge amount. You can see. Next is again a case of the ROC Ahmedabad for non-filing of financial statements. Order number ROC Gujarat adjudication order section 137 2022 from 437 to 440 dated 26 August 2022 in the matter of Ananya Investment Consulting Private Limited on company rupees 10,000 and 553 days of late penalty of 100 rupees comes to 55,300 rupees, totaling to rupees 65,300 rupees, and on 3 directors for rupees 65,300 each.
That's a question has come. what if the company does not have the website? See, the question is, what if the company does not have the website? Question is, whether the company is required to have the website or not required to have the website. That's the first question. So it is not the choice. If the company has to require to have the website, it has to have the website, it has to provide. If the company is not required to have the website, then there is no question arises. Somebody, Sangeeta is answered, if the company does not have the website, not required. And another thing is asking, if the non-functional website, no, what is the purpose of having a website if it's a non-functional? You have to set right. Website is optional, you can leave. No, website is not the optional. Website, if the company is required to have the website, naturally they allow to have the website. It is required for the listed companies and also the specific class of companies. That is there actually. So it is not your choice. It is as per the eligibility criteria. Okay, next is, can we get the PPT for reference? Yes, PPT will be shared on your registered mail ID, and also the recorded session will be uploaded in the YouTube. That also will be available to all of you. I think that's all the questions. I think I don't see any other questions left out. I think we have taken all the questions. If still the participants have the questions, yes, they can raise. We can answer the questions.
Can I share something with the participant, Mr. Bala?
Yes, yes, please, yes.
Now, all of us being a company secretary, we have to remember that now under this Companies Act, consolidation of accounts is mandatory compared to voluntary few years back. Now, many people do not realize when you have to do the consolidation. Now, consolidation is a must if you have an associate, if you have a joint venture, or if you have a subsidiary. And we have a lot of misconceptions. For example, if let's say we have a private limited company and they have invested 60% in the partnership. So they get a profit for partnership gets accounted in your P&L. So normally people think that consolidation is not required because the wrong notion in mind is subsidiary means it has to be a company. No, it could be any entity. So sometimes people have come to me and I have found that though consolidation should have been done, but they have not done. So you must take care wherever you are a company secretary, any of the company, the first thing is prepare your list of associates. And associates is such a simple thing. As per accounting standard or even as per the Ind AS, if you hold more than 20 or more than 20%, it is considered as an associate. You deemed to have an influence in the decision making, whether you are on the board of that company. So in that case also you have to do the consolidation. So for example, if you are holding 21% share in some other private limited company, so that will trigger the consolidation. So practically just be careful that consolidation has to be done even in all these cases. Otherwise this penalty etc. can get triggered.
You are absolutely right, Nikhil. It's very much useful. Thanks for the input. Because the word associate does not mean it is only a company subsidiary or something like that. So it is any interest you have created beyond the specified limit that will definitely trigger the figure. That is absolutely correct. You are right. Thank you very much. We have not been getting the presentations since the last few weeks. We used to get religiously.
Even I haven't got last Saturday's presentation. Maybe they have forgot. So,
Kiral, you are there? Kiral, I think you have to answer this question because people are all saying that.
No, must have been forgotten. So,
yeah.
It can be said now.
Yeah. Anyway, no issue. We will definitely arrange to share. Pooja, you tell Kiral, okay, to share the PPT to all the. Yeah, there are some more people they are saying I too have not received. We will ensure that it is shared actually. Yeah.
Yes.
That is all I think so. So I think with this we can end the session. I would like to definitely express my thanks to all the participants, especially the Pooja Jain and also Nikhil in particular, and also all the participants who raised the question made this session very lively. It is yet another session, knowledge adding to all of us. I can definitely say I have also got certain knowledge added during this particular session because I mean, being an old timer, I want to keep in touch. When I meet the young people like you, I always feel 20 years younger. So that is a privilege what I am actually meeting all of you. And Ravina, you have definitely done a wonderful job in putting everything together in the capsule form and explaining nicely each of the provision, etc.
Thank you.
Very thankful to you for the wonderful job what you have done. Thanks to everybody. I think we will close the session with this. Thanks a lot to everybody. Take care. Have a good weekend. Thank you. Thanks a lot.
Thank you.
Thank
Sir.
you, Ravina and Pooja.
Thank you, sir.
Thank you. Thank you, everyone, the panelists. Thank you so much, sir.
Thank you, Ravina.
Thank you all.
Thanks for Ravina for waiting the time. We are just 3 or 4 minutes away from 1 o'clock. That is also a great job. Good.
Thank you.